let's focus on Anand Rathi Wealth. They exceeded its AUM guidance, what they've given in FY24. In the third quarter itself, the net inflows as well grew over 40% on a year-on-year basis. Feroze Azeez, the Deputy CEO of Anand Rathi Wealth, joins us on the show. Hi, Feroze. Good morning and always good to see you in. Well, the numbers look quite good. It appears the street is taking some money off the table. That's why we're seeing some mild profit taking. But tell us, you've put out already a guidance, the revenues and the profitability for the year, that's FY24, you've exceeded more than 75%. Do you want to revise the guidance number that you've given? And where's the AUM headed? You all were talking about 50,000 crores for the year. Well, it seems you want to do it in 9 months itself. So what's the new target out there?
Nigel, good morning. It's so nice to talk to you again. Point one, like you said, from an AUM standpoint, we have achieved close to 55,000 crores of assets under management. Our definition of assets under management is dramatically different of how the industry or other companions in the industry measure. Having said which, for 55,000, we had actually started the year saying it was 47,000. We revised it last quarter as a guidance to 51,000, and we've got to 55,000 already. But we're not going to revise that because AUMs are a measure on the last day of the quarter, so we don't want to revise it and let it pan out in the next 3 months. But what we take immense pride in is the fact that if you look at how equity mutual funds net mobilization for us has been for the last 2-3 years, but this last 9 months is also staggering. So I'd like to highlight in the mutual fund industry, equity, AMFI second category as they publish it, 1,12,000 crores is the net assets which got added. But if you remove the SIP number, the SIP collection was for 1,41,923, which implies that the lump sum net without SIP inflows is minus 29,000 crores. The corresponding number for Anand Rathi is positive, and positive like how? 3,557. If we have, as a distributor, have an aspiration of getting to 3 to 4% of India's equity mutual fund market share, I think it's a great step in the direction when the industry, apart from SIP flows, is minus 29,000 and you are positive. So was the case last year. It was minus 9 and a few thousand crores for us positive. So our aspiration of getting into a serious equity mutual fund market share seems to be headed in the right direction, point one. Point two, we are again not going to be revising the PAT guidance because we have this tendency, because we are in the business of commitments, even to clients or expectation creation. So we would like to undercommit and over-deliver. So we're not revising it again this quarter. And we will let the year pan out in the next 3
All
months.
right. Take your point, Feroze. Thank you so much for joining in. And we take your point on not wanting to revise the guidance, but promise and overperform, so to say. Just wanted your thoughts, since you spoke about the market share, etc. If you could give us a sense of where it stood at the end of the previous quarter, and what is your aspiration there? How long before you get to that 3 to 4% mark? And for that, how many RMs more would you have to recruit? You saw close to around 129 RMs being added in the last, rather 45 RMs being added in the last 12 months, and 129 of them are sub 3 years. How big a delta will that be for you, market share and the RM addition?
Mangalam, the market share in equity mutual funds currently for us stands at 1.27%, if I'm not wrong. And we're still one of the largest non-Indian bank distributors. So it's a very fragmented industry. So if you look at next 5 years where the industry would grow and then multiply it with 3-4%, the number is mind-boggling, because India's financial savings, especially equity side, equity mutual funds as a total base of Indian household savings, which is close to 750 lakh crores is there in Indian household savings. And we have some 27 lakhs in actively managed equity mutual funds. So that's 3-4%. So I think we're going to have a large industry itself growing. And there we have an aspiration of 3 to 4% in the next 3-4 years or even 5 years. So it's an aspiration, not a guidance. That's point one. Point two, I think the more important part is that RM addition. We believe this business does not have a glass ceiling. So if you look at the average assets per RM, it's just about 140, 150 crores, somewhere thereabouts. But my largest RM is 1,500 crores as well. So the point I'm trying to make is the same plant and machinery has huge potential in terms of client addition. We have a 50, 60%, even 70% increase in client addition possible without one single RM added. because we think that a RM can manage 50 clients per head and still do justice to our brand in the marketplace. We are at an average of only 30. That means you can add 20 into 300 odd, 7,000 client families can be added, managed by the same a relationship manager. Then if you look at the RM edition, I personally think we will not be very keen to expand the RM fraternity, because training them, imbibing a value principle, imbibing finance is a long drawn process. That's why you see 45 edition. We are still training about 350 people for the future already, which we call account management function. That's close to 340, 350 people are there who are being trained to be RMs over the next 2-3 years. So we take a smart set from there and promote them, because hiring from outside, we sometimes find it difficult to get the same social fabric.
Okay, let's focus on that AUM per RM. As I can see in your presentation, it's at 166. Where do you see this number headed? Point number one. And I recall a couple of quarters ago, we were talking about 10,000, active client families. Well, you're almost there. What's the next target there?
Yes, Nigel Bhai. So what happens is, in our business, if you have 9,600 clients who push you to grow, they give their friends as references. So as we have done justice to their monies over the last 10, 11 years, and mathematically so on a risk-adjusted basis, portfolios have done phenomenal. So clients take pride in referring. So we personally believe that our aspiration, internal aspiration, is to have 250 new client families every month. We have some distance to cover. Of course, the last quarter was the best net client addition, but I think we still have a headroom of getting to 700, 750 per quarter. And I think hopefully we'll get to the 5-digit number by the year end. That's, of course, not a guidance, but aspiration.
All right. And final question before we let you go. What was the issuance through MLDs this quarter? And at the same time, digital business, what's the outlook there? You've reached an AUM of close to around 1,500 odd crores. The thoughts here?
Yes, like we've always told you, Mangalam, and the shareholders, that digital business, we are still trying to see how we get the heart aspect right. Because digitally growing wealth management business, we worry that during bad days, clients start opening their apps and transacting. Clients don't open their apps on normal days. When the market falls 5% or rises 5%, the traffic on those apps is significantly higher, exponentially higher. So we're trying to solve the heart and the mind aspect. So we've tried to solve it to an extent that it's a profitable business, but still not as scalable. That's why during the IPO also, you would have heard us say that we don't want to value these businesses till we know how we can explode that business. So it has grown beautifully. The team has done a great job, but we would still want to be very cautious in giving commitments, because we're still trying to crack the code for a scalable business like we have in the private wealth space.
Okay, all right. Feroze, always good speaking to you. Wishing you all the best for the remainder of this year, and wishing you a good 2024. And as we have seen over the years, you have played a big role in developing this equity cult here in India. So wishing you well personally as well. Thanks a lot for joining in.
Thank you.